Welcome to our Savvy series. I'm Catherine Magaña here with Rachel Ivanovich. And today we're going to talk about something that almost every investor has experienced. It's about crypto, stock tips, and the friend problem. And so it usually starts innocently. You're at a family barbecue or a friend's barbecue. You might be playing golf. You might be at a retirement party, a birthday party, a wedding, you name it. You're out having fun. Or maybe you're just having a cup of coffee with a friend. And then somebody mentions to you a stock that they bought, or they're talking to you about cryptocurrency and the latest investment or IPO that's out there. And so another person says, "Oh, I've made so much money on this investment and you should buy this." And so suddenly the conversation shifts and you're wondering, well, should I be doing this? Once again, I know in the past we talked about FOMO, fear of missing out. And so what's interesting is some of the biggest decisions that are being made sometimes aren't in the financial advisor's office. They're out and having conversations. And while these are, casual conversations with people they know and trust, then you start thinking about, okay, am I missing out on something? And so today we're going to discuss why social influence is powerful and why intelligent people often make emotional decisions and how to really have the conversation about smart financial planning.
So we're going to start out with why we trust our friends more than we should. So one of the reasons investment conversations are so influential is because they come from people we know and like and trust. Yes. So of course it could be a good idea, right? So a friend's recommendation oftentimes feels more personal than something that we hear on television or we see on social media, and it really feels more believable because we know these people. Yeah. We're close to them. We trust them. It really feels credible. And so, but here's the challenge. Your friend might be successful, but actually they're not qualified to give you investment advice. And oftentimes people mistake confidence for expertise. And so someone may have made one successful investment and suddenly they're everyone's financial expert. So meanwhile, they rarely mention if they had an investment that didn't work out or that lost money.
Funny how that happens.
Yes. But the success story actually travels so quickly and the mistakes stay private. So this creates a very incomplete picture for you.
And so psychologists often have a term, it's called social proof. And while you see other people doing something, you naturally think, oh, that's a good idea.
Of course.
And, natural behavior, you're thinking, I want to be a part of this. But investing, it can be dangerous, especially when the markets are fluctuating or if you're in a strong market and you think everything is going to continue to go up when the reality is it could fluctuate. So while it seems like everyone around you is making money and it's easy and that you're falling behind, this creates an urgency for you to feel like I need to be a part of this, and that can affect your decision making. And that's why you have to take a step back and ask, okay, is this investment right for me? And you need to be not asking yourself, why am I not doing this? It's just more of looking at it, in a different way.
It's a difficult question.
Yeah, and really looking at, okay, why? What is this investment? Why am I even thinking about it?
How does it fit in my financial plan?
Exactly.
So let's talk about from conversation to investment. So think about how many investment decisions begin for you. So someone at the barbecue you're at mentions Bitcoin or something, or a golf partner starts talking to you about an AI stock, or a neighbor mentions a company that they've been buying and making a lot of money on. And none of these conversations are inherently bad because they actually can introduce some interesting ideas. The problem begins when the conversation begins and it becomes a purchase and you pull the trigger and make the decision. And you need to do some research first. You have to understand the risks and you really need to consider how it fits into your financial goals. And nothing's wrong with gathering ideas and actually having the conversation. It just gets risky when you start treating the casual conversations like investment research.
So when somebody kind of makes a recommendation or an investment,
should buy it, right?
Yeah, it's like, wait, take a step back, slow down, and start asking some questions like, does this investment make sense? What risk am I accepting? How does this, like you mentioned, how does this fit in my overall financial plan? Am I buying this because I understand it or because somebody said I should buy this? Or you should be asking, if somebody didn't mention this to me, if you didn't hear about it from somebody that you know and trust, would you still even consider this type of investment? And so if the answer is no, then emotion may be playing a larger role than you realize.
So what do disciplined investors do differently? Disciplined investors, they don't ignore new ideas. They're curious, so you need to be curious. Disciplined investors enjoy learning, asking questions, and they don't confuse curiosity with commitment. So before investing, you want to evaluate whether an idea actually fits within your long-term strategy. And you look at diversification, risk, of course, taxes, and your time horizon, and how the investment that you're thinking about or investigating supports your financial goals. Because a disciplined investor, their investment decisions are driven by a plan, not by the last conversation they've had.
So it's interesting, some of the best financial conversations don't always involve stock tips or the latest investment or IPO. So instead of asking, what should I buy? Successful investors often ask, how did you build your financial plan? And so when we look at financial plans, one of the things that we factor in are your pensions, your Social Security, if you have any real estate, what kind of income do you have coming in? How much do you need to spend? And then we look at, how are your investments structured? Do you have to take required minimum distributions? Look at everything. And once again, you factor in the tax part of this. And so when you look at kind of your overall plan, one of the things that we look at is, okay, how are we allocating our money, kind of like the different buckets that we look at. And so there could be some money set aside for savings or cash flow needs, meaning your emergency. You could have some investments tied to income investments that are generating income for you. And then you also have your growth investments. So really segmented based on what your investment needs are, what your income needs are. And so when you design a financial plan and you have a strategy in place, the idea is that it's working for you. Now, we're not saying never have an idea, but you do have to factor everything in before you start making big, drastic changes or moves.
And be curious.
Yeah, and it's okay to be curious and learn and want to know, if there's other ideas out there. Because, obviously the, everything changes daily, and it's just making sure that along the way that if anything's changed in your life, that we want to make sure we know that. And so the next time someone comes with an exciting idea, once again, listen, learn, ask questions. We're available if you want to chat and talk about,
have fun with the conversation.
Right, that's true. You can have a little fun. And so it doesn't mean not to, have these conversations. It just means, see how does this fit in your overall plan and circumstance. And so over time, a disciplined strategy outperforms any kind of one-off investment. And so, once again, we're here as a resource. If you want to talk and go over your own financial plan or have a strategy call with us, you can reach us at 760-692-5700. And we want to thank you today for getting savvy with us with your finances. And remember to savvy up. Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results, and the indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Savvy Woman Wealth Management is a registered investment advisor with the SEC.